everything that Trump has done is pushing the world away from the dollar. That's why the dollar is going down. That's why gold is going up. That's why China and India and Russia have never had stronger relationships than the ones they have right now, right? We are, shooting ourselves, again, not in the foot, but in the head, the housing emergency. So all of this is inflationary. All of this is going to, drive up drive up gold and push down the dollar as we expand money supply. Of course, the Fed is going to have to do QE because no one else is going to want to buy this stuff.
The dollar is losing ground while gold keeps climbing, and Peter Schiff says the trend is only accelerating. With China, India, and Russia tightening ties, the global financial order is shifting away from U.S. dominance. Trump's policies, he argues, are speeding that process along. Gold is already up more than 40% this year, with gold miners like the GDX doubling in value, showing how quickly capital is moving into hard assets. Schiff points to history as a guide. Once gold broke above $2,000 in 2024 and then surged past $3,000, it set off the same kind of momentum that carried the market from 2001 to 2011. That earlier bull run multiplied the metal's price sixfold. If the pattern repeats, he believes $12,000 gold isn't a wild call but a realistic long-term target. From his perspective, we're still closer to the beginning of that cycle than the end. At the same time, the housing market is cracking under years of manipulation by the Federal Reserve. Cheap mortgage rates pushed homes out of reach for average buyers, and now higher rates haven't brought prices down. Instead, policymakers are repeating old mistakes, loosening lending standards, backing risky mortgages, and having the Fed absorb the debt with new rounds of quantitative easing. Schiff says this playbook might keep housing afloat for a while, but it comes at the expense of the dollar. Every new intervention weakens confidence in U.S. currency, and in his view, that only makes gold stronger and accelerates the global shift already in motion. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
41% year-to-date gains in gold. Look at the gold mining stocks. The GDX has now officially doubled on the year. So basically, we're through 8 months of the year, right? And we've had a doubling of the GDX. Double. I remember in April, I put out the special report, the best way to buy gold. And I was, practically begging my gold customers not to buy gold. Because I said, you take that money and buy these gold stocks, because I'd never seen them this cheap in my life relative to the price of gold. So I said, below ground gold was such a bargain, you have to buy it rather than the above ground variety. But I also saw the greatest combination of fundamentals that I'd ever seen for the price of gold. And I expect an explosion. Last year was the breakout, 2024, when gold broke above 2,000 and moved up above 3,000. But I think this move is going to mirror, at a minimum, the move from 2001 to 2011, where the price of gold was up sixfold. So if you take sixfold from 2,000, that's $12,000 gold, right? We're barely a third of the way to 12,000 or a fourth of the way to $12,000 gold right now. We are so much closer to the bottom than we are the top. Yeah, I really wanted you guys to buy closer to 2,000, but I don't care. You got to buy it now. Same thing with silver. I was telling everybody 30 was the floor. You got to buy $30 silver. There was minimal downside risk. We barely ever went below it after I said that. And now we're buying $40 silver, $41 silver. The problem is, and I've talked to the guys at Schiff Gold, and I've talked to people I know at other gold companies where sales are slow. People just don't want to buy the high. Well, you know what? You got to get used to buying the high. If you don't buy the high, you're not buying gold and silver. You got to buy the high because we're going higher. And the longer you wait to buy the higher the high you're going to buy. So you might as well buy it now, because if you wait, you're just going to pay a higher price. That doesn't mean you're never going to get a down day or a down week, but it's not worth waiting. You got to just read the writing on the wall here and recognize the historic nature of what is going on. In fact, even Bukele of El Salvador, right? The Bitcoin guy just announced that he bought $50 million worth of gold for El Salvador, right? He was poo-pooing gold a few years ago when he was buying Bitcoin. Now, instead of buying more Bitcoin, he bought $50 million worth of gold. Congratulations. I'm glad to see that. Now, if he could just sell his Bitcoin and buy even more gold, that would even be a better deal. By the way, Bitcoin was barely up today, in the face of a big move up in gold. In fact, year to date, Bitcoin is only up about 18%. I mean, that's not bad, 18%, but gold's up 37%. Bitcoin's supposed to be up a lot more than gold. It's supposed to be a turbocharged version. It's supposed to be gold on steroids, right? But it's only up. And, it could easily finish the year negative. And, of course, if we had a great economy, why would we have a housing emergency? Part of the emergency has to do with how weak the economy is. Again, if we had the worst economy in the world under Biden, and that economy is objectively worse now, we have a weaker labor market now than we did then. And inflation, even though it's lower than its peak, it is rising. Remember, the worst year for inflation under Biden was his first year. And that was, a leftover from Trump. More specifically, the Fed policy during COVID under Trump, which he endorsed and signed on. But the worst year for inflation for Biden was his first year. For Trump, the worst year will probably be his last. I think inflation is going to accelerate every year during the Trump presidency. So instead of starting off with high inflation and having it trend lower, he's going to start off with elevated inflation and have it trend higher, which is why the Republicans are going to lose Congress during the midterms and lose the White House in 2028. And the bigger problem there is a lot of the things that Trump is doing to usurp powers not authorized to the president by the Constitution, to the extent that Congress and the courts allow him to get away with it. His successor, who is going to be a radical left-wing socialist, will wield that weapon with much more danger and veracity than Trump. So this is the problem with creating this slippery slope. All the Republicans who are happy to allow Trump to have all this extra power, right? Even though he's doing harm with it himself. But because it's their guy, they're okay. They're not going to be able to say anything when it's the other team that has that club, and they start using it in an even more destructive way than Trump did. So there is a lot to be concerned about right now, but I'll get to that maybe in another podcast. There's a few things I wanted to discuss during today's podcast. But on this housing emergency, housing prices are too high. Why are housing prices so high? Because for a long time, the Fed kept interest rates at zero. And so a lot of people were able to get really low mortgages, 3% mortgages, 4% mortgages. And because homes are bought not based on what the home cost, but based on the monthly payment, the lower the monthly payment, the more somebody could pay for a house. Now you have a problem where housing prices went way up, but then mortgage rates went way up, and home prices never came back down to levels consistent with more expensive mortgages. Now, of course, that will happen eventually, and that may create a housing emergency in that it's going to create a bunch of defaults. And a lot of people are going to walk away and mail in their keys because they can't sell their houses for more than they owe. Now, some people are staying in their houses only because they've already locked in a low mortgage rate. So that's keeping some of the selling at bay. But at some point, there are people that have to sell their houses for whatever reason. And if they have to slash the prices to do it, they may not have enough money to repay the mortgages. And so this could have a cascading effect. Trump is talking about how much money Fannie and Freddie are making, and he wants to privatize them. Well, they're going to lose a fortune once housing prices drop. And of course, all those losses are on the taxpayer, right? When these things go public, they talked again today about privatizing Fannie and Freddie. But again, they're not being privatized. They're only privatizing the profits. They're socializing the losses to a degree that they've never been socialized before, because in order to do the offering, they have to take that implicit guarantee and make it explicit. So Donald Trump will be doing something that even Franklin Roosevelt wouldn't do, that even Lyndon Johnson wouldn't do, or Richard Nixon. So Trump is far to the left of those presidents, right? Some of the most liberal, big government presidents we've ever had. And Donald Trump is to the left of them. He wants to do something that even those guys weren't reckless enough and irresponsible enough to do. Now, I guess it's because they didn't have buddies that stood to cash in on it. So, I mean, I think Trump is doing things that help his friends, not that help his country. But again, I digress again. Let me get back to the problem at hand. So home prices would come down, which would create a whole bunch of problems. But, that's what has to happen. Because if housing prices are too high, the solution is for housing prices to go down. Then people can afford to buy them. People can afford to borrow money at higher rates if they don't have to borrow as much money. Because again, it's the monthly payment. So if I'm buying a $500,000 house with a 3% mortgage, if the house goes down to $250,000, maybe the payment is the same with a 6 or 7% mortgage. So I can swing it. Plus also the down payment is less because the purchase price is less. So that is the solution. But Trump doesn't like the free market. So he wants to do something different. And I think what they're going to try to do with the Fed that they are trying to take over, and with Fannie and Freddie, my guess is they want to lower the lending standards at Fannie and Freddie so that they can make even riskier loans than they've ever made with the full guarantee of the U.S. government, so they can unleash massive credit. And they're probably going to make sure the Federal Reserve steps up a new QE program to buy all these risky mortgages that Fannie and Freddie securitize. Just buy up all their bonds to prop it up and just flood the country with liquidity aimed at propping up the housing market. But of course, all of this is pure inflation. It's a massive credit expansion, and you're just going to accelerate the demise of the dollar and the rise of gold.
Peter Schiff is warning that the Federal Reserve's independence, the very thing that made the dollar trusted worldwide, is hanging by a thread. For decades, investors believed the Fed was above politics. If that perception breaks, the dollar's credibility goes with it. Schiff argues that once the White House effectively controls the Fed, whoever wins the presidency also wins control of monetary policy. That means unlimited money printing, no restraint on deficits, and no incentive to rein in government spending. He reminds people that the Fed was never truly a government institution in the first place. It was designed in 1913 as a private banking cartel, because the Constitution doesn't actually give Congress the authority to issue paper money. Instead, the Fed became the middleman, controlling credit and shaping policy in ways that kept it insulated from direct political battles. Schiff says the Supreme Court may not abolish the Fed but could rule its independence unconstitutional, making it answer directly to Congress and the president. That would strip away any illusion of neutrality, turning U.S. monetary policy into a political tool. The result? Shaken global confidence in the dollar and a faster move into gold and silver. Let's get back to the interview.
So I think what the Supreme Court might do is actually strike down the concept that the Federal Reserve is independent and make it clear that all the FOMC members serve at the pleasure of the president, and the president can fire whoever he wants for whatever cause he believes justifies the firing, because he was elected president. He's got the power. The people trust his judgment. And therefore, if he believes that a FOMC member, for whatever reason, is not fit for the job, then he can remove them. That is the risk, because that will destroy Fed independence. Now, yes, if Trump wants to nominate a replacement FOMC member, the Senate is going to have to approve the nomination. Now, the Senate might, right? The Republicans might, but even if there aren't enough Republicans who want to play ball with what the president is doing, he doesn't need replacement nominees. Even if they're short, they can still convene and rule. So as long as Trump gets rid of enough board members who oppose what he wants to do so that his guys or gals are in the majority, then even if there aren't enough, so he can fire every single FOMC member until the majority that remains will do what he wants, because the policy is made based on majority vote, right? So if there's only 3 FOMC members left, it's two out of 3 wins, right? So, but this is going to show the world that there is no independent Federal Reserve. And, we've been touting the independence of the Federal Reserve for a long time as this is why you should trust the dollar. This is why you should trust our monetary policy, because the Fed is independent. It's above politics. But if that's not the case, if it's completely political, if the president effectively controls the Fed, meaning that when we elect a new president, we're simultaneously electing a new Fed chairman. In fact, a lot of people have said that the most powerful job in the country is chairman of the Federal Reserve. Well, how can the most powerful position in the government, right, be for an official that's not even authorized by our Constitution? I think it will be very easy for the Supreme Court to declare the whole thing unconstitutional. Now, I don't think they're going to wipe out the Fed completely. I think they're just going to say, in order for the Federal Reserve to be in conformity with the Constitution, it must be accountable to the President of the United States, must be accountable to the Congress. It can't be some independent authority that exists on its own to do whatever it wants, right? I think that is what they're likely to rule. And that's going to send shockwaves throughout the global economy, financial market, because now people are going to realize that, it's going to be debt monetization, right? There is no independent check that's going to force Congress or the president to ever act fiscally responsible. Why should they? Once they control the Fed and they have the printing press, why should they ever cut spending, right? Just print whatever they need. They'll keep interest rates as low as they need. And this is a huge risk that nobody is talking about, the loss of independence. And of course, what I don't expect the Supreme Court to do is recognize why the Fed was independent. Because it's not a government agency. That's the lie. The Federal Reserve is a private banking cartel. The member banks are not owned by the government. They're not part of the government. Even the Federal Open Market Committee, even though they're appointed, the members are appointed by the president and confirmed by the Senate. They are appointed to roles outside the government. And once they are appointed, they are not accountable, right? Once you appoint them to their 12-year term, they do whatever the hell they want, right? You can't say, I don't like your decisions. For cause doesn't mean because you don't like, their monetary policy, right? That if you could just get rid of them because you didn't like their monetary policy, there would be no point of a 12-year term. The whole point of a 12-year term is so you can't get rid of them. Now, obviously, if there's a real legitimate reason that has nothing to do with their policy decisions, then yes. And you can't concoct a reason if it's obvious that the reason is you disagree with their policy decisions, and so you go looking for dirt, then that doesn't count, right? Because it's obvious what you're trying to do. You're trying to remove somebody for their policy choices, which you have no authority to do, and you're trying to use this phony, mortgage thing as a way to do it. But again, the reason that the Fed is independent, and this is not something that this court is going to address, is that what the Federal Reserve does, right, issuing paper money, is something that the U.S. government has no constitutional authority to do. That's why it didn't do it. That's why it created the Fed. It created the Fed to do something that it could not do itself. Why? Because the monetary powers of the Federal Reserve are created in Article 1, Section 8. And in Article 1, Section 8, the federal government is given the power to coin money and regulate its value. Coin money. That's it. What does coining money mean? Well, it means taking money and making a coin out of it, right? Not a paper bill, a coin. And what is money? Well, money is defined in the Constitution as gold and silver. How do you know this? Because Article 1, Section 10 says no state shall make anything but gold and silver coin legal tender. Okay? So that's money. Gold and silver coins, that's legal tender. Nothing else. That's all the Constitution. Now, somebody might say, well, that says no state can make anything other than gold and silver. It doesn't say the federal government. It doesn't have to, because the way the Constitution is written, the federal government can only do what the Constitution authorizes it to do. The states can do whatever they want as long as the Constitution doesn't prohibit it. That's why the Constitution says no state shall coin money or emit bills of credit, right? So states can't make their own money and they can't emit bills of credit. What's a bill of credit? That's paper money, right? So the states are banned from printing paper money. But the federal government is only authorized to coin money. It is not authorized to emit bills of credit. And in fact, the earlier drafts of the Constitution, and you can see this in the Elliott debates, the earliest draft said Congress shall coin money and emit bills of credit. And by a vote of 9-2, they removed emit bills of credit. So it wasn't an oversight. They deliberated allowing the federal government to issue paper money, and then they decided, no way, we don't want to allow it, right? We had a bad experience with the Continental, right? We don't want any paper money. So the Constitution was written to ban paper money, right? So it would never exist, at least not from the government. Now, private banks, they were allowed to emit bills of credit all they wanted, right? Private banks could issue banknotes, and they did issue banknotes. And that's why we ended up getting a central bank, and the Federal Reserve was basically there to rediscount commercial paper issued by other banks. I don't even want to get into all of the rationale behind why people thought having a central bank was a good idea. But the fact of the matter is, it had to be private. It couldn't be part of the government because then it would be unconstitutional. So it had to be this separate thing. Now, in my opinion, the way they went about creating it, I think that's unconstitutional too. And that's what I think the current Supreme Court is going to rule, that this setup, right, of this independent Federal Reserve is unconstitutional and it has to be part of the government, but it's not.
If monetary authority shifts from an insulated institution to a tool of political cycles, the world will not wait patiently to see how America manages the experiment. Nations already diversifying reserves into bullion and away from treasuries will only accelerate that process, reshaping capital flows in ways that may be irreversible. Gold's rise, then, isn't simply about speculation. It's about a wholesale reassessment of where safety and credibility now reside. The deeper question is whether the United States can maintain its position at the center of the global monetary system, or if the cracks in trust will widen into a permanent realignment toward hard assets and alternative currencies. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.